The following is a presentation of TFNN. It is now time for the Diagnostic Trading Hour with your host, Darrell Martin. Now, Darrell Martin.
All right, folks, welcome on back here to the Diagnostic Trading Hour. Let's see what we got going on right now. We got everything is quiet, waiting on the Fed funds rate to come on out. So come out here in just 1 hour, not even an hour from now. They're going to have not the rate, but the minutes, the Fed funds minutes. So obviously everybody on pins and needles want to know, is there any more cues as to how soon they're going to be cutting that QE? What is everybody thinking? What's happened behind those closed doors? So everybody's waiting to find out those details, and we'll be finding out very soon. That can cause some major volatility. Before it causes a whole lot of nothing, and that's sort of what we're in right now on most of the indices. Russell is sort of bucking the trend. It's decided to be moving on up, and it's been pretty strong even right now. But I expect that it'll go quiet along with the other indices over the next hour here. Right now, we got the S&P down 1.25 points, and it looks like we got the Russell is currently up 0.1 on the day. It's had obviously a lot of intraday volatility, but right now it's just up a tick. We got the Nasdaq up 12 and the Dow down 17, so sort of mixed results across the board there. Then on oil, it's currently up $2.26 on that inventory report. Massive, massive move on oil. Always a rough day to trade oil and inventory reports on Wednesdays. It can be great. It can be not so great, depending upon what side you get stuck on, right? So, always use caution on Wednesdays when oil inventory reports do come out. But up $2 on the day. It's a 2% move, lower than expected. Basically, inventories dropped. What is it, 90 million barrels, whatever, on the day. I'll pull that up here. We'll look at the rates again. I was looking at it earlier. But I'm looking at natural gas right now. It is basically flat on the day. Looking on at our ags, we got corn is down $1.50 and soybeans are up $10. Euro dollar currently up 73 pips. Aussie dollar down 37. Pound dollar up 77 with U.S. CAD down 18 and U.S. franc down 72. We'll get on now at Euro Yen. Euro Yen is currently down 46 pips. Pound Yen is down 80, and U.S. Yen is down 98 pips on the day. So I got some major movement, a lot of dollar weakness across the board there, except for Aussie dollar. Dollars had a little bit of strength against the Aussie, but against a lot of the pairs right there, or I guess down would be dollar. Yeah, that's right, dollar weakness. So everyone's waiting with that FX. You get those. Which one's up and which one's down. And a little bit of ear stress going on, right? And try to figure out the, getting dizzy looking at all these FX pairs. Looking over at gold. We got gold currently up 6.8 points right now. Silver is currently at 0.77. It's about 0.5%. Copper also up just a little over 0.5%, up 0.021 on the day. So checking this out right now, let's go ahead and look at the reports that we had come out earlier. And let me pull that up for you. So we had the oil inventory reports that already came out. They came out at negative 0.9 million. There's an expectation of negative 0.29 million. And so that right there lets you know, not only was it lower than expectations, but also it was, a lot lower than expectations since the massive move in oil. And that's 9.9 million barrels below what it was last week. So last week it dropped 10.2. This week it dropped 9.9. So we're starting to get a little downtrend. Before that, it was basically flat on the day. It had been going up, but now we got 2 weeks in a row. Oil inventories dropping down. However, for this time of year, oil inventories are about on par on average with what they usually are. I was looking through the details of that oil inventory report earlier and just reading through the lines. And the fastest way, if you're ever trading this report, the fastest way to actually get the news on the oil inventory report is to go direct to the source. Okay? So again, direct to the source. And right there, I'll put the link right there over in the den for you. But direct to the source on the oil inventory report. In that third paragraph, second line is what you're looking for, where it says decreased by 9.9 million barrels. I'll show you that right here on the screen if you're watching there on Tiger TV. But looking over here at decreased by 9.9 million barrels from the previous week. That's the big number. That's the one you're focusing on. And you can go through and you can sort of read the rest of the report, but that's the number that's going to usually immediately, pop the market. And so, you can go in there if you want to do it. You can try to do it before. It's hard to do a straddle or strangle on Nadex on oil. It's one of the first things I looked at because I'm like, this is an every week news report, But the problem is it's an every week news report. It's also, there's a lot of implied volatility already built in to the news. So therefore, not into the news, but into the energy market. So because they're volatile markets by nature, like natural gas. People always ask me, what's the most volatile market? That's the one I'm going to trade on Nadex. I'm like, well, the most volatile market is probably natural gas, but it's always volatile. So that doesn't help you because they build that into the pricing. So what you want is fundamental shock. You want implied volatility that changes. You want, where it's not expected that it's going to move and it moves big. And I'm not talking about they think it's just going to stay flat. I'm just talking about big, fast moves. And they expect on a daily basis that, natural gas will move 1% to 4%. It pretty much does on almost every single day. So that's going to be built into the market. Okay? Right there. So let's see what else we got coming up. Right here, it's about 1:12. And let's go ahead and check out a couple possible trades we might be able to do. So that's always a fun part of the day, trying to see just what's available. We're going to go on in here. We're going to look at the scanner. I'm going to check the binary scanner for the moment, do a little bit of maybe neutral plays here. See if we can find anything that just looks perfect for us. And we'll go in and we'll do 70-90. And let's start off with just checking out the metals. Okay? And we can see if there's anything that really adds up for us on the metals. And sometimes there is, sometimes there isn't. And so you just want to look and see, if there isn't anything, then, there's just not a play. And by the way, if you ever can't find something, one is reset all your filters. Okay, so one tip for you, reset filters. Two, refresh your browser. But so when you hit reset filters, it sort of puts everything back because it's so easy to maybe hit a button you didn't mean to hit. But I can go at 70 to 90. That'll narrow down all my choices instantly, and then I can even drop it down, say like an hour. Okay, and then I'll only see what's available, say in the next hour. Because I may have to, go way out here to actually see what's available that I can use, what I can utilize. And notice we're not really seeing much of anything in the market for right now that we can take advantage of, which is pretty surprising. Usually we do have something on there that has some, good value. And we go over here into the Nadex platform, and we can look at that and just sort of see, where they're at. Well, look at that. We got 4, 56, and 96. That's why there's nothing there. It's either at the money or not at the money. And so there's nothing, there's no expectation of volatility, so there's no premium built in at all. 19.205 is basically where we're sitting, and they basically don't expect silver to move at all for the next, 10 minutes or so. Looking on over at gold, you can see the same thing. We'll pull that up, the 130, and 1255. Well, we're at 1252.5, and there's not a lot of expectation on volatility in the next 10 minutes on gold. So we're just not seeing a big move right there. You can always go in, you can try to do some premium plays, but they're going to be so close. Like right here, we probably actually just popped up on the scanner over here for gold. We had to get that one. Yep, there it is, $74. See that, $12.52 just popped right on in there. But I'm looking on over at several things. I'm looking at, to see is there anything happening over in market noise. I'm looking to see on my time and sells, how's the market ticking. I'm sort of seeing it tick down. My 8-period moving average is ticking down. So just looking at all that right there, I'm really not comfortable with taking it long, saying it's going to stay above 12.52. So that's just asking probably to get slapped and lose on that trade. So if I had a short, I might look at that. But no shorts currently on the table. And there may come one. One may come up. This may get to the point where it becomes a short. Okay, if it gets far enough below 12.52 here in the next 15 minutes. So it's possible that that trade could line up and become a good potential trade. But, I don't know how far it's going to go down. I don't know if I want to say it's going to finish below 12.52 at the moment. I'd rather have it either be below it already. It's trying to, have it right there, right when I get in. I like to have that edge, not be right on the line. And I don't really think it's necessarily going to pop to 12.49 or 12.55 here in the next, 15 minutes. It could. But that's just, that's a low risk trade, but it's also a low probability trade. So you're counting for a solid, 3 points on gold, which it hasn't really moved more than a few points in the last, I don't know what, like hour. So it's just been oscillating up and down for about the last hour within that 3-point range of like 1252 to about 1255, 1254.5. So it hasn't even moved up and down 3 points in the last hour. So there's no reason to try to do a straddle on this. And we don't really have an in-the-money option on it. So the one other, let's see, one we got coming up, we got over here. So natural gas is going to be 230, and copper is already closed down. So it shuts down the earliest. So it's already gone, so there's nothing on copper. So we can go in there and we can get rid of copper, and silver's going to shut down here in just a few minutes. We got 7 minutes. Doubt we're going to have a trade on that. But now we got a silver. Silver just popped up. Okay, so we got a 192.2. That's on the line. That's just asking to get slapped. So I can't believe it's $72. That's actually pretty surprising. But so going in there and looking at that trade, but $72. And but I mean, silver is at 192.205. So you're talking a tick, literally a single tick away from profiting or losing. And if you did in the money, if you bought that thing, you're talking about a $72 risk to make $28 based on it staying exactly where it is or going higher. So I'd be a little nervous about that. I need to see this move up quite a bit. And again, looking at just the trend on it, I'm still bearish on silver at the moment. So I really don't see a big reason to, go in and buy that. For selling it, you could go in. Selling might be an option. It'd be a lower risk trade, a $28 risk for $72. But you got about 7 minutes for it to drop, and it has to be at or below 192.20. It has to drop about 3 ticks. So that could be a low risk trade right there. Pretty quick, pretty easy. As long as it does finish at or below 192.20. But if it's at 192.20.5, you're gonna lose on the trade. By the way, it hasn't been at or below 192.20 since like 11:30. So it's really been very, very range bound, which would lead one to go, why don't I just buy the one for 73.50? It's really close, if you want to take that risk, but it's really, really close. Okay. And what I'm talking about, again, if you don't know, is the premium collection strategies that I'm constantly teaching. So where I go in and I say, hey, you know what? We can go in, and if the market does nothing, we make money. If the market stays flat, or if the market does nothing, we make money. If the market goes in our direction, we make money. If it goes against us a little bit, we make money. But I want there to be a little bit of room in that little bit. And right now, there isn't a little bit of room in there. There's only like a tick or two, and that's way too little for my comfort level. It's just it's not worth the risk. So you don't have to chase the trade. You don't have to get the perfect trade. You just want to get the right trade and set it up and put it all together. So anyway, so that puts that for us together right there. Now you could go in and you got, until like that 2-minute warning. Now you could go in, you could hop on, you could check it out if you think it's going to finish above it. And but that is one possibility. All right, well, stay right there, folks. We'll be right back after this break. Bye.
Says you can't take it with you. TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Victor Jones, or Darrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces, and over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Darrell takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
And just looking at everything right now, and silver started flying down like right at commercial break. And I mean, it was just going. And remember, I said I was short on it, so I was waiting on it, and then it just popped. And so looking on over at that, I went ahead and decided to grab the trade. So wish I could have called that on the air for you. But it flew on down. I basically sold 10 contracts for $30.50. They'll expire here in a few seconds. Once they expire, then that'll be a profit of $5. So $305. There we go. Boom. So $305 paid out, but very quick. So I mean, that was literally during commercial break. That's what I love about net. When you hop in there, pardon me, you can grab those trades really, really fast, and you just got to be watching. And let me see here if I can bring this chart over for you. And if I can, then I'll sort of show you what I was looking at. A couple of things I was looking at. I'm always watching a few different things over here. But anyway, so like right here, I'm looking at silver, and I'm just watching. All of a sudden, it drops right down. I mean, you see this? Like it just starts popping. I just hit the button and grab it literally as quick as I can. And flies on down there. And gold did the same thing. So I was already in the silver. Silver's about to expire. I was like, I'll just grab that one. It's quick. And but both of them popped right down, just really, really fast. You had the 1249, went on down to 1247, So total shock. Did not see that move happening on gold that fast right there at all. And but pretty sweet when it does, you know. So let's see here. So we got a few more minutes left. Could it fall further? Could it? Well, yeah, I guess it could. You could go for 1246. That'd be another 16 pip drop there in the next 4 minutes. So if it pulled that off, you'd make a massive profit. So let me see here. But looking at that, yeah, I mean, you go in. If it got 1246 for 87.50, with it currently trading at 1247, so you'd need a 10-point drop. So if you did that, this is like an in-the-money trade, okay? And so you can put that trade in there and grab that. And if it finishes below, okay, 1246, then you get a really nice payout. But understand that trade right there I just did, that's like a low probability trade, okay? Because, I mean, it's just, it has to move. That's the difference. That one has to move a point down. If it doesn't move, it's going to be a losing trade. Now, the profit on it, massive, okay? If it makes money, it's going to make $940. The risk, $60, okay? I don't really have an expectation that that trade's going to profit. So I'm using some of the money I just made from the other trade to look at a potential for getting in on it. But, you know, every once in a while, right at the end, you'll start seeing some crazy volatility. And you can go in there and you can make some good money. So some other things you can do. You know, I went in, I sold that for $94. And like I said, it's flying down. It's going 1246.6, 1246.5, 1246.6. You know, you could look at, well, what do I need to do to get out at a break even on this trade? Well, I sold 10 of them. So I could go in and just set a take profit at 5 for, you know, if I'm worried about the $6, I guess. I could set take profit at 90 on 5 of them and see if somebody actually takes my trade. Okay? So I don't know if there's really a need to do that, but I could put that in there. And it basically what it would do is I would make $6 on 5 of them, and that would cover the $6 risk on the other 5, and then knock it out. So, but I usually see these out of the money trades, they're like lotto tickets. Okay, so I'm never going to put a lot of money up on them, and I really don't expect them to happen. I would say, you know, less than 5% of my trades are out of the money binaries. Almost all of them are in the money binary trades because the probability of success is so much higher when it's in the money, simply because it's in the money. It doesn't have to move. It can move in your direction. It can stay flat. It can move against you a little bit, and you can still profit. So this right here, the market has to move down 2 points, or I lose. The previous trade, the market didn't have to do anything, and I made money. So you can see the advantage. And so one side, though, your probability is much higher, so your risk is higher. Okay? That would be the in-the-money one, like I just did on silver. On the out-of-the-money one, your probability is lower, so your payout is much higher. So you got to decide, are you a high probability trader that, you know, likes to profit a lot of the time, or do you want to do lower probabilities but get big payouts? Or do you want to do a little bit of both? I do a lot of one and a little bit of the other. I do a lot of high probability with a little bit of low probability. And every once in a while you get lucky on the low probabilities. But it's the problem is it's every once in a while. Like, what if you do, if you do 10 of them, you make $90 on the one you win, but you lose $10 on the 9 you lost. You sort of break even and you just went through 9 losses to get 1 win. Was it really worth the psychological damage?
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. With the stock market flirting with all-time highs and volatility back, now is the perfect time for a 2-week free trial to Market Insights. On Monday, June 24th, Tom O'Brien closed out all 5 open positions in his daily newsletter Market Insights, with all trades being profitable and ranging from a 2.23% gain all the way to more than an 11% gain in just one position, for an incredible 32.7% profit combined between the 5 trades. Let Tom O'Brien's years of market experience work for you. If you'd like to see for yourself what kind of trading newsletter Tom O'Brien delivers to his clients each morning, then now is a perfect time to sign up for a 2-week free trial to his daily newsletter, Market Insights. In a volatile market like we currently have, the potential for fast market moves like we've seen recently is a trader's dream. So don't wait any longer. Sign up for your 2-week free trial to Market Insights today at the front page of TFNN.com. The Art of Timing the Trade Charts has officially launched at TFNN. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind software, The Art of Timing the Trade Charts allows you to scan for Fibonacci formation setups, including Gartley's, butterflies, ABCs, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the market for stocks just beginning to form the trading patterns that many investors spend days, weeks, and even months searching to find. As part of our introductory pricing, we're offering licenses available at only $59 per month. We're so confident that you'll love this new outstanding piece of charting software that we'll even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Lock in your low price today by ordering your copy at TFNN.com. Darrell Martin coined the phrase diagnostic trading, and we're happy to announce that his Diagnostic Box Spread Analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Darrell Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
All right, folks, welcome on back here to the Diagnostic Trading Hour. And we're checking out right now, just looking at all the different markets, trying to decide what we're going to do. We got some possibilities going into this Fed funds rate and then going out of the Fed funds rate. Okay, so what do we got going into it? All right, well, we can get rid of our metals, and let's turn on our indices. You also could look at FX pairs as well. But right now I'm going to do a little focus on the indices at the moment. And probably more inclined to stay focused on the ones that have been flat. I'm going to avoid the Russell because it's been pretty shaky. Okay? It's been moving up and moving down a lot more than the other 3 have. So I'm just going to turn the Russell off to delete the temptation. And then we're going to move this on down to, an hour left till expiration. Then I'll get rid of everything else that we don't need to see. And then we'll see, what do we have? Okay? Now notice I'm not choosing buy or sell. I'm going, is there a butterfly opportunity? Maybe, maybe not. What do I got here? And so I'm sort of looking at the market right now. I see all 3 indices. I'm looking at the broad market index as well. So basically that's the New York Stock Exchange Broad Market Index. If you day trade future indices during the day, you should be looking at this indicator right here. This is the advanced decline of all the stocks on the New York Stock Exchange. How many are up for the day? How many are down for the day? And what is that trend? And you can see a very, very clear, okay, again, a very clear trend line that was broken. And now we're starting to see the indices are looking like they're heading on back up. Okay? So, We'll see if that trend continues. But right now, everything is looking more to the positive side. But you know what? I'm still not going to be just totally bullish. It is Fed funds rate. I'm sure everybody's going to cheer, and whatever they say on Fed, we're going to have to delay this, do to that, whatever. But you never know, man. It's good old Bernanke. You never know what's going to come out of his mouth. And so I want to be cautious. That's why, if I'm trading this announcement, I'm trading it on Nadex. I'm trading it with defined risk. I'm probably going to back off on futures contracts and really focus in on defined risk contracts because anything can happen, especially when minutes come out and everybody is looking. And so looking on over here, let's see what we got. We got the S&P 500. We could do a sell. We could do a buy. But right now, I think everything can stay range bound. So do I think this is a good sell? 1646.2. Now, it has to stay above there between now and expiration, which is in about 23 minutes. Okay? Do I see a better option? I got a 1290 by 1285 over on the NASDAQ. So NASDAQ 1290. I like that. I'm not a big fan of the 1285, but the 1290, we've stayed below 1290. Actually, that's actually above the high of the day right now. So it'd have to break the high of the day before the Fed funds rates came out, before we'd have a loss. So that's a trade I'm probably pretty inclined to favor. Right there is that 1290 on the NASDAQ. That expires at 2 o'clock. Okay, because that means, again, the market would have to break a high for me to lose on that trade. Okay? And so that's one trade we can put on in there. And then, let's see, what else do we have? I'm trying to see what else we might be able to do on this. Look at all of them and tidy them all up. And you always want to go over and check and see, what orders are filled, what orders are working, what do you got going. And so that way you just make sure all your contracts are where you want them to be. So we got that one in. And now let's look at the other ones that we can do on here. And again, this is just premium collection, just saying, hey, I'm expecting that it will stay below this price between now and expiration. Okay? So that's the $29.90 right there. And if it doesn't, you know what I'm going to do? I'm going to get out when it hits it. All right? So again, I'll get out when it hits it. What does that mean? So if it goes up and it hits $29.90, just get out of the trade. It's okay. You can do another trade. But you don't want to be stuck trying to make it back literally for, a long period of time. You don't want to be stuck in that trade literally. Like if you go in and you hold it till expiration, then you're something that goes from like, $20, $25 to a value of 0. And what that means is actually you could lose 75 because the maximum value on it, the stop loss is up at 100. So you can't lose more than $75 if you sell it for $25, but you could lose $75 on a $25 profit. I don't like that risk-reward scenario. What scenario do I like? I like the scenario where I can go in and I can buy it back at $50. That's a $25 risk on a $25 reward on a trade. I can go in, grab it, and basically just put all the different pieces together. But that's how I would do that trade. And I want to make sure that I have my risk management in place. So again, to review that for you, if you're looking at NASDAQ, you're like, okay, right now we got 12,990. That looks like a potential, resistance level right up here. And if it hits it, just get out. Okay? So that's, some of these trades are going to work out great. Some aren't. Just don't let the risk just nail you. Because it's painful to lose $75 and make for a profit of 25. It takes 3 profits to make back 1 loss. So you're not really going to want to take that kind of risk reward if you're not going to follow your rules. And that's what it's all about. You got to follow your rules. That's what any trading is about. I don't care if you're trading futures, forex, stock, Nadex, binary spreads. You always got to follow your rules. And if you'll do that, if you have proper money management, proper size allocation, okay, you get out when you're supposed to, have a trading system, meaning I know when I'm getting in, when I'm getting out, how I'm taking my stops, how I'm trailing my stops, By the way, before you get in, not gut feeling of, I think based on the way I see this, I might just do that. And then I don't know if I'm quite ready to get out yet because I want to be right about my decision. That's the benefit of rules. Rules are before you get to get involved. You make those rules before you hit the enter button. And because if you don't do that, then when it comes up that you have to make a decision to say that you're wrong, you're less likely to do it. Okay, you're less likely to follow your rules. So have your rules, have them there up front, and execute them without hesitation. It'll save you a lot of grief. Okay? So now let's see, what else do we have in here that we could take advantage of, that we might be able to do? And just trying to look at a few of these things right here. But right now, just watching that position. The big thing now, let's get ready for something afterwards, because some of y'all don't want to do that premium collection going in. So let's go ahead and look at what we might be able to do going into it, which means we're going to have to expand out, right? We're going to have to go, okay, what about post? Okay, post this trade. So we're going to move it right here so we can sort of get rid of current stuff, and then we're going to move it out so we can see what exists for the rest of the day. And then we're going to flip. All right, we're going to go like $5 to $30 risk. Because what I want to see now is I want to see potential straddles. And so I could look at indices for straddles. Obviously, you may expect there to be quite a big move. Okay? So indices would be one option for doing straddles right here. And straddle means you need to be looking for a 1-to-1. And they're going to be pretty expensive. You're looking up at like 1653 by 1637 would be a straddle on the S&P 500. They're always going to be expensive before Fed funds rate. These are strangles, by the way. And you got 11 by 8850. That's still, you got 18 by... you really want these ones where you can get in. Like I could buy at 11, I could sell at 43. So if I bought at 11, I sold at 43, I'd make $33. I'd lose 1250. That basically put me at a 1-to-1. But that means the NASDAQ has to hit 3,008 or 28,968. So I'm really depending upon it hitting that price. So I'd buy at 11, sell at 43, or I'd sell at 89 and buy at 57. And I do both of those at the same time, so I'm not picking a direction. Okay? And that literally would be your entire plan. We'll be able to go in and do that trade. So now we could also go down, we could look at, you got the 3 o'clocks, you also have the 415s. That's just going to push it further out on you. 2968, 85, 2968, 8850. So this one actually is going to, let's see, that's interesting. Let me highlight that. Let's look at that one more time. 2968, 89. Okay, yeah, so you should make a little bit more money when it's closer because you have less time for it to move. That makes sense. All right, every once in a while you'll see them where they sort of mess up. And, sometimes it's not even worth it. You want that extra 15 minutes or extra hour. I mean, think about this. Right here, you can go in for 85 versus 88.50 on 29.68. So for $3 more, you can have an hour and 15 minutes for it to move down to 29.68. That's probably worth $3 to you, okay? Another hour and 15 minutes into the end of the day. Over here, if we look up at 3,008 on the NASDAQ, well, for $1.50 more, you can have another hour and 15 minutes for it to move. So if you're choosing between, like, say, a 3008 and 2968, 3 o'clock expiration on Nadex, or between a 3008 and a 2968 on 415, you definitely want to choose the 415. I mean, you're only talking risking like $4 more, but giving yourself an entire hour to be right. And the hard part about binaries, okay, is either you're right or you're wrong. There's usually very few times where you're break even on a binary trade, okay? And so, to open this trade up, I'll show you the example. We'll go ahead and we'll open this one up on NASDAQ. We'll say, hey, maybe we're going to get a big move on NASDAQ over here. And I'm going to do light. I'm only doing one contract, okay? I don't have any stats on this news trade. So I just know that, often the Fed will move the market quite a bit. So I'm going to trade really, really, really cheap. I'm only putting like $30 at risk on the entire thing. And but I definitely think it's worth a few bucks to get another hour and 15 minutes. So I'm going to choose the 415s versus the 3 o'clocks. I'm going to sell that one for 85. I'm going to go in. I'm going to buy this one for 1250. Okay, and place that order. Okay, I got filled on both of those. Just looking over my live account. Now I'm going to flip around. I'm going to put a buyback. So I'm going to click on this. I got to switch it to buy. So I'm going to buy back the one I sold for 85. I'm going to buy it back for 57. I'm going to hit place order in there. And then over here, the one I bought for 1250, I'm going to click on the sell side, click sell, make sure it says sell, okay? And then I'm going to say sell it for 43 and hit place order. And now I have all my take profits in place and ready to go for my news strangle on the NASDAQ. All right? So we got that one in. Now we could go ahead and look at Russell now for the strangle, because Russell has been, sort of moving up and down quite a bit. See if there's anything that really looks good on the Russell. We got a 1,026. Basically, I mean, you're just going to be repeating the same thing over and over again. So pick your indice. Do you think NASDAQ's going to move more? S&P's going to move more? So NASDAQ obviously is a pretty volatile indice, and so is the Russell. So one of those two would probably be my top two choices on doing strangles. Now the other option is you can do straddles. You can go over here to spread scanner, okay? And so on the spread scanner right here, you can go in and I'll pull that up. And what I'll do is if I'm going to do a straddle, then we'll check out maybe a currency on the straddles. I'll put a reward risk ratio of 1. And I'll put $100. I only do this on the straddles. I don't do this on the binaries. But over on the straddles, $100 max risk. And then I can go and I can look and I can see, is there anything that looks really good? I'll go see, that's a 2 o'clock. Well, that's not going to do me any good, right? Because the report comes out at 3. So that's like 25 pips risk. That's 25 pips. Not a big fan there. All right, so basically I have to risk $50 on this trade. Not a big fan of the straddles on this trade at the moment. Okay, so let's see here. What do we got? We're going to go ahead and say no to that trade. And let's go over, let's look at maybe the pound. We can check out some of the different currency pairs, see if something lines up that looks better. And there's a lot of implied volatility. This is something that happens like right before the announcements come out. You'll see implied volatility really rush into the market. That one I could get a little bit wider out for about $40. You're probably going to get a solid 40 or 50 pip move, which means that isn't going to do you a lot of good because you're going to make back your 20 pips, like to break even, and then you're going to make the $20 you lost on the other side. So it's not necessarily the most beneficial thing to hop in on a $50 risk on this trade because, again, you don't have the stats. And so I'm just trying to give you a variety of things to look at, whether it be a butterfly or whether it be premium collection before it, or whether it be a strangle or a straddle into it. What's going to be your best risk reward scenario that you can take advantage of. Okay, let's see here. So we got those pieces in place, and let's look. Most of the indices right now are heading higher, it looks like, into this report. And so you can also see, what else could I do? So let's go look at the binary scanner. We'll see if there's anything else over there, just even on the buy side for the strangle side. And we'll look at the 3 o'clocks. And this is one way, by the way, to hedge yourself. Is you could go in and let's say you were doing a premium collection trade, you could actually go in and do a hedge by buying a higher binary contract, just in case the thing explodes, to help make back some of that money. Anyways, stay there. We'll be right back after this break.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page at TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of TFNN.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments.
Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
Welcome on back here to the Diagnostic Trading Hour. So we got our strangles set up and ready to go on the NASDAQ. We'll see if that, if the NASDAQ pops and takes off or falls on down, or maybe if it's just a non-event. Sort of not thinking it's going to be a non-event due to the markets in general, how they've been moving, how they've been trading lately. And then, of course, all the, anticipation around QE of how, everybody's trying to figure out when is it going away. So they're really going to look at those reports to see, and the sooner it looks like they're going to go away, more likely the sooner the markets will drop. Because it's like, well, things are improving, which would think the market go up, but then, of course, we get the, QE going away, makes the market go down. How soon are they looking at the interest rate? All those different little pieces together. We also have on our premium collection, $29.90. So it's really close, but it's right above the high. So we'll see if support right there can help us out on that one. And, looking at depth of market, that's very helpful with that. Looking at time and sells can be very helpful when you're looking at trades that are that close and on the line. Just sort of seeing where do the orders exist in the market currently. And by depth of market, I mean literally the DOM on, whatever platform it is you use. So whether it be, say, Thinkorswim or NinjaTrader or whatever it is you like to use, you'll have depth of market on your active trader, I guess, over on Thinkorswim, or you'll have just file new DOM. That's how you open it up over on NinjaTrader. And like I said, you can basically pull up a DOM, like right here, and see the depth of market in there. And This sort of lets you see, where the order's stacked at. Like right here we have orders at 29.87.50. We're getting down to like 100 contracts, 29.87. And up here we have 200 contracts at 29.88.75, 28.99. And so as you notice, it's been oscillating in between that range. They've sort of been holding it there. And that's what these big orders do. They're holding it until the market basically has enough orders to push through one level or the other. So, and they will break through one of them here in the next few minutes when the minutes do come out over the news wire. And one of the things I look for, one of the things I like to look at when it comes out, there's a good site one of my friends made. It's just a free site, but it's financialjuice.com. And you'll see, like, all of a sudden, all the reports will start streaming in from multiple places. And so you can sort of see, what's going to send, what message is coming out, what was in there, all the Autobots reading it and sending stuff out. So it'll make it a little bit faster for you if you're trying to figure out what's happening with that Fed minutes report when it comes out here in the next few minutes. But just a good resource, and I use it pretty much every day around any kind of major news report to help me out whenever I'm placing my trades. Let's see. All right, we got the current, so we can do a current summary of the positions that we have on real quick. We got the sell 29.90s. We got those on, so as long as it stays below 29.90 here in the next 2-3 minutes, then we're good on those. And then we also put on a strangle. So we got a strangle where we bought the 29.68, or sorry, bought the 3008 US Tech 100, and for 12.50 we have an order in to sell that out at 43, and I sold the 29.68 with an order for 85.50 with the order to buy that back for 57. So, all those pieces together, and so, I did the strangle a little bit lighter because I don't have stats on it. And trades without stats, I don't like that. I like fundamentals, seasonals, technical, statistics. I like all three of those things in my favor whenever I'm going to do a trade. And just makes it a lot easier, in my opinion, to manage a trade when I know what to expect and therefore what to do if what I expect doesn't happen. I have a plan in place. So, sort of funny to see some of these reports come out. Stocks, little changed ahead of the FOMC minutes. No kidding, because nobody wants to take a position. That's why we're going in both directions. We're buying and selling. Check it out. Find out more over on TFNN's homepage. Click on the Nadex banner. You can get an account and trade right along with me each and every day as I do these trades. You'll have a great day, and I will see you tomorrow.
Nowhere, spelled N-O-W-H-E-R-E. At one point, we've all been there, whether it be our health, career, or our finances. Some might be there right now. So where are you when it comes to your trading and investing? Better yet, where would you like to be? The good news, I can take you from nowhere to now here right now. Same letters, N-O-W-H-E-R-E, just a totally different emphasis and focus. Hi, I'm Steve Rhodes with TFNN, and on July 25th at 6:30 p.m., I'm going to share with you a trading strategy that I began on May 10th when the S&P was at 1627 and closed at the same price 8 weeks later. That's right, the S&P went nowhere versus a trading strategy that produced a 100% hypothetical return in that same period of time, and it's now here for you. Subscribers to my daily newsletter service, Mastering Probability, have free access to this exciting live workshop. The trend is your friend. All the details are on the homepage of TFNN.com. Decisions shape your destiny, and your trading destiny is now here for you.